Hello, Baker International Finance students. This is our final week. I can't believe how quickly this course has gone by, but I would suggest just wrap up early this week, enjoy the next weekend, begin just the forum discussion post, jump in early, get your homework done, and then follow up with your final quiz. And hopefully I'll have the grades done shortly after the course ends with only 3 people. I probably even have it posted by Monday. So anyway, for this week, we have our final 2 chapters. Chapter 15 talks about tax management, and Chapter 16 is more about how we finance international trade. So, just start off with Chapter 15. Recent events, especially with the Trump administration, there was a big push to try to lower the U.S. corporate tax rate. The United States was kind of viewed as having one of the highest tax rates in the world. In fact, just a recent article with some of the tax changes, Apple is bringing back a huge amount of cash to the United States because that they know now that it will not be taxed as much. So there's debate about that. We obviously in the long run got to figure out how we're going to support all these services, government services. And if we lower taxes, then we lower personal taxes too in a quite growing economy, which is kind of ironic because there's really no need for any fiscal policy or expansionary fiscal policy to do so. So it may hurt us a few years down the road, but we'll have to wait and see. So, all right, so to go through some of the concepts this week, we look at some of the principles in Chapter 15. First, the idea of tax morality and tax neutrality. Morality, is what is the right thing to do. Neutrality, you think, as a tax when I implement it, I try to lessen the harm to any economic activity. So that's something countries have to consider when they focus on tax rates. And then they looked at the 2 approaches. They said, hey, there's the worldwide approach, which kind of the U.S. follows, that it's wherever the home country or the corporation is based in that country. So if you're a corporation based in the U.S., any income earned here or overseas is going to be taxed. And then we have a territorial approach, like what the Germans do, that you'll read about in your chapters, that it's only income that's earned in that country. And so it's idea of equity again. Every country or every corporation that exists in Germany, whether it's foreign or home, gets taxed at the same rate. Some other things to define too. The U.S. concern obviously with corporations going overseas and kind of getting out of taxing rules, all the way back from the 60s. It got to a point where it defined, well, who are the true owners? If the true owners are in the U.S., they still need to follow the tax rules, the tax laws. So with that, they also mentioned different types of taxes, direct and indirect. Direct is based on income. Indirect can be such things as value-added tax, consumption tax, excise tax. Think about sales tax. So different ways that someone can raise revenue. Last, with multinational tax management, the goal is to maximize earning per shares. You can think of that in terms of after you have your revenues, your sales, minus cost of goods sold, minus any interest deductions. Then I have my taxes that I pay, and then I have I like to call it the soup, what's left over to either plow back into the company or pay out to shareholders in the form of the dividends. So you're trying to maximize earning per share. And the authors of the textbook say, tax avoidance, that's actually good. That's okay. That's legal. It's a tax evasion that's bad, and that's legal, and that's when you go to jail. Usually you have to pay pretty heavy fines. So do pay your taxes, but we do try to find ways, even on a personal level, to lower our tax liability, and that's perfectly fine. It's a strategy. But they mentioned some other strategies too. They said allocation of the debt. Obviously, like the United States, we give a deduction for any interest expense that can help lower our tax liability. So it might behoove certain corporations to take on more debt in their capital structure. Foreign tax credits, just as we get personal income tax credits, we can get tax credits for operations in other countries. They can be such things as transfer pricing, what I might charge a subsidiary in my multinational enterprise. That way their cost of goods are higher, cost of goods sold higher, so it lowers their tax liability in maybe a higher country. They talk about cross credits, that if I have a deficit here, I can match it with a credit here, so you try to match it equally. And then finally, David just mentioned the check the box, which was just kind of an example, literally a box on a U.S. tax form. There was kind of a little bit of a loophole that corporations could check at one time to give them some tax benefits. All right, lastly, wrap up Chapter 16, International Trade Finance. They had 5 main ideas. One, just first starting off, how are we going to finance these imports and exports? We need some type of bank or some type of intermediary. And the second, they talked about the key trade documents, the letter of credit, kind of a promise to pay and a bill of lading, kind of the required documents, the receipt, the contract, the title, if you will. There's also the third one was the government export company, financing programs helps to expedite trade. The fourth, alternative trade vehicles or financing. There can be bankers' acceptances, trade acceptances, factoring, when you're purchasing receivables, something you probably read about in your finance courses before, and then securitization, that actually they're kind of pulled together and sold as a package. And the last thing meant like forfeiting, where I kind of working with two different banks. You think about an importer and an exporter. Well, importers worried that they're going to actually get those goods. Exporters concerned about whether they're going to get paid. So there are parties that are willing to take that risk totally out of play for those two parties, and by having certain somewhat guarantees, they're willing to take on that risk. So, all right, that was a summary of this week. So I want to say that I've enjoyed working with you all online, although it's been seemed very quick and brief, but best to you, and I hope you enjoyed this course and learned a lot along the way too. Take care.